Today we have a smart money strategy for you that works in the direction of the trend. It can give you a 3R bar and has an extremely attractive win rate. Basically, this strategy operates within the trend. And when the price hunts liquidity and creates a stop hunt, it takes you along with the trend. That's why, since it's in the direction of the trend, it gives you a very attractive win rate, and you can at least get a 3R bar from it. Be sure to stay with us until the end of the video. You'll learn every detail step by step. Maybe you've been told many times, or you've learned or heard, that you should trade in the direction of the trend, but no one has taught you a strategy that actually takes you along with the trend. So today we'll learn everything together. Before we continue with the lesson, guys, we've just started this channel. So for support, don't forget to subscribe, like, and leave a comment. Let's get started with the video together, dear friends. As you can see here, we're on the DAX index on the 5-minute time frame, which shows us the top 30 German stocks. We can use this strategy on the 5-minute and 1-minute time frames for the symbols I'll mention: Dow Jones, Nasdaq, Gold, and DAX. You can use these 4 symbols for this strategy. First, let me draw the schematic for you on the chart, and then we'll continue. Look, friends, basically, we need to identify a range, either a resistance zone or a support zone, and wait for this zone to be truly broken. How do we know it's been broken? When the price pulls back to it, and a trend, for example an uptrend, forms by creating higher highs and higher lows, or when our support is broken, we don't act just on the break itself. We wait for a pullback, and when the price starts making lower highs and lower lows, that's when we can say, yes, our zone has truly been broken, the breakout is valid, and it's not a fake out, it's a real breakout. Now, if you look closely here, we had a resistance that was broken, the price pulled back, created higher highs and higher lows, and formed an uptrend. As you can see, dear friends, let's find an example for support as well and draw it for you to show when it gets broken and when it's valid. Look, we have a static support here. The price comes and does a fake break once, but the next time it breaks through and starts making lower highs and lower lows. If you look closely here, we have a pullback, but lower highs and lower lows haven't formed yet. Here, the highs and lows are easily formed with this sphere, and we can easily identify and follow the trend. This point will really help you, dear friends, to learn and follow the trend direction and to recognize whether a breakout is real. For example, here we have a support. If you look closely, it's been broken several times, but it hasn't made lower highs and lower lows until now. So this strategy not only helps you join the price after a real breakout, but you also don't have to jump in right when the price breaks your zone, wondering if it's a fake or a real breakout. It's a very simple, important, and practical tip that can really help you, dear friends. Now, after you've done these steps, what should you do next? You know, as we've mentioned here and pointed out many times in previous videos, you can watch the previous video. When an uptrend forms with higher lows, many people place their stop losses behind these points, and essentially there's liquidity behind them. Similarly, when the price forms a downtrend, many people put their stop losses behind these points, and again there's liquidity behind them. For example, if we consider this trend here, we know that here and here, even you need to look at all the corrections and identify their lows, as well as all of these. Again, right here, there's liquidity behind it. You can see how beautifully it comes and hunts that liquidity and then makes its move. Once more, if we want to analyze it together, here again we have an uptrend. The price comes here, there's liquidity here, and it comes and hunts that, then makes its upward move. So the second point or tip for this strategy is that you need to know that behind the recent lows in an uptrend and within a downtrend, behind the recent highs, there is liquidity. In my opinion, everyone who works with smart money concepts or has studied it understands and knows this. Right here, you can see it hunted the liquidity and then moved. Let's give another example for a downtrend together. Look here, behind all these lines that I'm drawing, there's liquidity, and this move has come and taken all that liquidity. In the previous video about the strategy, we explained and discussed this overall hunt where it comes and takes all that liquidity, which is the best ICT strategy. Up to this point, dear friends, we've learned 2 points. Let's summarize them and then move on to the main topic, the core strategy and the main lesson. The first point is that with this strategy, you don't need to join the trend right when the level is broken, whether it's support or resistance. You should wait until the channel forms with higher highs and lows, or if it's a downtrend, with lower highs and lows, so we can be sure that the level has truly been broken. The second point is that we need to know that in an uptrend, there's liquidity behind these lows, and in a downtrend, there's liquidity behind these highs. Now we need to draw their levels. Look, exactly as I'm telling you, you need to draw those levels so you can use them. If your low is just a wick, first, if you see the wick is long, you can connect the wick to the previous or next wick, the first wick you see along its path. Draw it like this. Sometimes we see that our level's wick isn't very long, so we can draw from the wick to the first body along its path. For example, look here, from this wick to this body. For example, here, this wick is very long. If I want to break it, my level becomes thick. Our level shouldn't be too thick or too thin. I can draw it up to this wick. You see how nicely it works for us, both in the past and in the future. You can see them, you can back test them. So the third tip we've learned together today is specifically about drawing levels. They shouldn't be too thick, because if they're thick, our stop becomes wide, and if they're too thin, they won't be reliable for us. Now let's get to the main point. Look here, my dear friends. We can see that this level has been broken and the highs and lows are higher than each other. You identify the lows that have liquidity like this. Now you need to draw them carefully, and then you draw the level that existed in the way you learned. I draw it up to the first body. Look closely at how my level looks. Now if you pay attention, when I draw the level, it's not very clear, but when you zoom in, you can see that this wick has come and hunted that liquidity. What I want to tell you is that these small wicks, when they come above the level and consolidate, you can take a long position with your stop behind it, aiming for a reward of at least 3 or a minimum risk to reward ratio of 3. This can be extremely effective for you. I hope this video has been useful for you. If you've watched up to this point, don't forget to like, subscribe, and comment to support us, dear friends. Don't miss the next videos. Turn on the notification bell and also check out the channel. In the previous video, we taught you ICT smart money strategies in scalping style. Have a great day and goodbye.